Welcome to Talk Tickers, everybody. We like to keep things light and fun here, but today's deep dive into Tradeweb Markets Q3 2024 earnings call, it calls for, a more somber tone.
Somber is a good word.
Yeah.
I mean, look, they just announced record revenue exceeding their last high by almost 10% to land at nearly $450 million.
That's incredible.
It is. It is. But their stock, TW, closed down today.
Down.
2.02%, ending at $128.79.
So record revenue and the stock goes down. I mean, what gives? That just doesn't seem to add up. What's the market seeing that we aren't?
Well, that's what we're going to unpack, right? I mean, Tradeweb's actually been on a tear, steadily gaining market share across many of their core products.
Like what? Give us some specifics.
Well, look at their swaps product, right? Big surge in activity there, U.S. credit offerings, it's expanding rapidly, and they're aggressively moving into emerging markets.
It's true. They're not just a rates company anymore. I mean, you look at their numbers, almost half their revenue growth is coming from areas outside their traditional rates business.
You got it. They're diversifying, expanding their reach.
And on top of all that, they've been making some really smart acquisitions.
Right.
Take the recent ICD purchase, for example.
It's integrating ahead of schedule and exceeding expectations.
So we've got record revenue, growing market share, successful acquisitions. It's a lot of good news.
Yeah.
But something is making investors nervous.
Yeah.
So what is it? Let's take a look at the details of this call and see if we can pinpoint what's spooking the market.
Okay. Sounds like a plan.
Where do you want to start?
Well, let's start with the good news, shall we?
Sure.
U.S. Treasuries.
Okay.
Record revenue.
How much?
A 33% increase year over year with record numbers in both their institutional and wholesale client channels.
Wow. 33%. That's incredible. And it's not just the revenue numbers. Their market share is something else, too. I was reading they hit a record quarterly market share of over 50% in U.S. Treasuries compared to Bloomberg.
That's 2 quarters in a row above 50%, which is huge. I mean, that kind of dominance really gives them pricing power.
Right. But the question is, can they sustain it?
Mm-hmm.
Because the competition in Treasuries, it's fierce.
It is. It absolutely is.
Okay, so let's move on to credit then. I mean, that's another area where Tradeweb's really shining, right?
Absolutely. Double-digit revenue growth in both U.S. and European credit. Strong performance.
Very strong. And they achieved their second highest fully electronic market share ever in both U.S. investment grade and high-yield bonds.
Mm-hmm.
They even hit a new monthly high-yield record of 9% back in July.
Yeah, it was a good month.
July was a good month for them.
Mm.
And I think it's worth pointing out over 40% of their U.S. institutional credit revenue growth this year is not just due to favorable market conditions, right? They're actually taking business from their competitors.
They are. That's a really good point. They're not just riding the wave, they're paddling hard.
Yeah, they are. All right, so let's move on. Let's talk about swaps. Global swaps also delivered record revenues this quarter. What are they saying is driving that?
Well, they attributed it to strong client engagement, which is probably fueled in part by, the uncertainty in the macroeconomic environment right now.
Right. Everybody's nervous. It's a flight to quality.
It is. And beyond that, Tradeweb's been grabbing market share, and we're seeing a pretty decisive shift towards higher revenue risk trading.
It's really incredible how much growth they're seeing in swaps. I mean, get this, 11 different swap currencies saw year-over-year volume growth of over 100%.
11?
11.
That's wild.
That's massive growth. And what's really interesting is that the swaps market is only about 30% electronified. So you can see why Tradeweb is so excited.
Oh, yeah, the potential is huge.
They're seeing meaningful long-term swaps revenue growth potential as they push into cleared swaps and start, dipping their toes into the bilateral swaps market.
Well, let's hope this growth is sustainable. I mean, are we looking at peak Tradeweb?
That's the question, isn't it?
It is the question. Well, they did give us a little peek into October's performance so far, and I gotta say, it's looking really good.
Oh, yeah. Revenues are trending 30% higher than last October, so on track for another record month.
Wow.
Yeah, and they're seeing particularly strong volume growth across global government bonds, mortgages, repos, and corporate credit.
That's encouraging.
It is encouraging.
There's a but.
There's always a but, isn't there?
Always a but.
They did say that both their investment grade and high yield market share, well, it's trending lower compared to September.
Interesting. So what's behind that dip?
They're blaming lower industry portfolio trading volumes in October. And I'm just speculating here, but maybe investors are looking at this dip and thinking, okay, is this a sign that things are slowing down?
Yeah, maybe.
And maybe that's why despite the record revenue, the stock price took a hit today.
It's possible, especially when you consider that portfolio trading has gotten super competitive, right? I mean, you've got some players offering trades for free just to grab some market share.
It's a race to the bottom.
It really is. So is this putting pressure on TradeWeb's pricing power? Can they keep those impressive market share gains we were just talking about?
I guess that's what we need to figure out. It's something to keep an eye on.
Yeah.
And for those of you listening at home, we want to hear from you. What do you think? Is TradeWeb's future as bright as its recent past? Are they positioned to navigate a potentially less ebullient market?
Before we get too far into the future here, I think we should talk about competition.
Yeah, good point. I mean, every company is only as good as its ability to, stay ahead of the pack.
Exactly. So who's out there? Who are they up against? Any rivals we should be worried about?
Well, one name that keeps popping up, especially when you look at the credit space, is MarketAxess.
Yeah, MarketAxess. They've been busy
Yeah.
enhancing their platform, expanding their offerings. They even partnered with ICE, which could be a big deal, really boost their credit trading capabilities.
So how does TradeWeb stack up? I mean, what are they doing to fight back?
Well, TradeWeb, they've always been innovators. And they're known for being really responsive to client needs. They've got all these trading protocols like RFQ, portfolio trading, all-to-all trading, sessions trading. It's all about giving clients options, different ways to trade depending on their style and preferences.
So it's about flexibility.
Yeah.
And I've also heard they're pouring money into technology and analytics, trying to give their clients a leg up.
Absolutely. And one area where TradeWeb has a clear advantage, it's their portfolio trading capabilities. That's really taken off for them. And they've been focusing on credit trading analytics, things like net spotting and dealer upsizing, which help facilitate those larger block trades.
So they're not resting on their laurels.
Yeah.
But, like we were talking about earlier, competition is heating up and pricing is becoming a battleground. I mean, you've got some competitors offering trades for free, at least for a limited time, to try and steal clients. How is TradeWeb dealing with that? I mean, how do they respond to those kinds of tactics?
Well, they're aware of the pressure, but they seem to believe that their platform, their technology, their overall client experience, it justifies their pricing.
It's like they're saying, you get what you pay for.
Exactly. It's like, choosing between a budget airline and a full-service carrier. Sure, the budget option might seem cheaper up front, but then you got baggage fees, cramped seats, no in-flight entertainment. Suddenly that full-service option starts looking a lot better.
It's a good analogy.
Yeah.
But, speaking of challenges, let's talk about another big one facing TradeWeb and I think the whole financial industry, frankly, and that is the rise of private markets.
Yeah, private markets, that's a big one. More and more capital is flowing into these private markets, which are, as you know, a lot less transparent, a lot less liquid than public markets.
And that's a potential problem for a company like TradeWeb, whose entire business model revolves around trading in liquid, publicly traded assets.
Right, they're bread and butter.
Yep.
If a big chunk of the market goes private, that shrinks the pool of potential trading activity.
So what are they doing about it? Are they just going to, sit back and watch as this trend potentially erodes their business?
They're not ignoring it, I can tell you that. They're keeping a close eye on things, watching how the private market space develops, and they're looking for ways to use their expertise and technology to tap into that market.
They did mention Apollo's recent launch of that ETF, the one that combines public and private credit. It was done in collaboration with State Street.
Right, with State Street. That's an interesting development. I mean, it's the first time we've seen that kind of hybrid approach, public and private credit together in an ETF structure. And what I found really interesting is that Apollo is committed to providing intraday liquidity, like executable firm bids.
Sounds a lot like what TradeWeb already does in the public markets.
It does, doesn't it? It could be a sign of things to come. Maybe there's a role for TradeWeb in facilitating secondary market trading of private assets, or at least these hybrid assets, the ones that blend public and private elements.
So the rise of private markets, on the one hand, it's a challenge, but it also presents some, new opportunities for TradeWeb to innovate and expand.
Yeah, like a fork in the road.
Exactly.
Yeah.
Okay, let's shift gears for a minute and talk about expenses and profitability. I mean, TradeWeb's been investing a lot in its business, and we can see that in their expense growth. Their adjusted expenses for Q3 up over 30% year over year.
30%, that's a big jump. Is that sustainable?
Well, they admit they're in growth mode right now. They say that strategic investments, they're crucial, but they also emphasize the scalability of their business model.
Scalability, yeah.
Their CFO, Sarah Ferber, She highlighted how their expense base is variable. She said it lets them invest for growth, but at the same time expand margins.
It's a balancing act, isn't it?
It is. And, a lot of their compensation costs, they're performance related. So if revenue growth slows down, well, expenses will naturally adjust too. So they've got a little bit of a safety net built in.
Makes sense. So they're trying to balance investing for the future with, staying profitable.
They are. All right, let's talk about cash. Tradeweb's got a lot of it right now. Over $1.2 billion in cash and cash equivalents, according to their Q3 report. So what are they going to do with all that money?
Well, they've made it clear that M&A is still their top priority. Acquisitions are how they see themselves growing, and they've shown they're willing to make bold moves. They've done 3 acquisitions in recent years.
And it's not just acquisitions. They're also exploring minority investments, partnerships, especially in the digital space.
Right, covering all their bases. They even hinted at, maybe share buybacks or dividend increases down the line.
They don't find any good M&A opportunities.
Yeah.
So it sounds like they've got a pretty disciplined approach to capital allocation.
It does. They're not just hoarding cash for no reason. They want to use it to benefit shareholders.
So we've covered a lot about Tradeweb's business today. I mean, we've looked at the record revenue, the market share gains, the challenges from competitors, the rise of private markets. So let's zoom out now. Big picture. What's their future look like?
Okay, big picture. Well, Tradeweb is a leader in electronic trading, especially in fixed income. They've been on a roll, growing revenue, market share, profitability. But, they are facing headwinds. Competition is fierce. The future of pricing is a little uncertain. And then you have the rise of private markets, which is a potential long-term threat to their core business.
It's a mixed bag.
It is. So the question is, where do they go from here? Buy, hold, or sell?
Well, we're not giving investment advice here, remember?
Of course not.
But we can say this. Tradeweb is a well-managed company. They have a solid track record, innovation and execution. They're good at it. And they've consistently shown they can adapt, capitalize on new opportunities. They've got a clear vision for the future, multi-asset class expansion, moving into those less electronified areas of the market.
Makes sense.
But as with any investment, there are risks. You've got the competition, and who knows what's going to happen with pricing. And then there's the whole private market situation, which, could be a real problem for their business down the line.
So do your homework, weigh the risks and the rewards. Figure out if Tradeweb fits with your investment goals and your risk tolerance.
All good points. So before we wrap up today, let's leave our listeners with a question to ponder. Today we've mostly focused on Tradeweb's performance in developed markets, like the US and Europe, parts of Asia. But what about emerging markets? Could that be the next big growth area for them?
Emerging markets. It's a good question. I mean, there's a lot of potential there. It's a huge market, and it's largely untapped when it comes to electronic trading. Electronification in emerging markets, it's still early days in a lot of places.
So they're testing the waters, but what's their strategy for really breaking into emerging markets?
Well, they're not naive. They know they can't just, use the same playbook they use in developed markets. They're being very deliberate, leveraging their global relationships, their expertise, building that trust with local clients and dealers, and adapting their tech platforms to the specific needs of each region.
So localization is key. You can't just offer a one-size-fits-all solution, right?
Exactly. And they're focusing on, product areas where they already have a strong track record, like interest rate swaps, government bonds. Start with what you know, build momentum, gain a foothold.
It makes sense. But emerging markets, they're notoriously complex, right? Fragmented.
They are.
Each country has its own regulations, its own market infrastructure, its own, trading practices.
Yeah.
So how do they handle that? How do they navigate all that complexity?
Well, they're being strategic about it. They're not trying to do everything at once. They're focusing on key markets, the segments where they see the most potential, where their expertise can really make a difference.
It's targeted approach.
Yeah, picking the battles.
So even with, the best strategy in place, what are some of the things that will determine their success in these markets? What roadblocks do they need to watch out for?
Well, one big one is regulation. Emerging markets, the regulatory landscape is constantly changing, so they have to be flexible, responsive.
Always staying one step ahead.
Exactly. And they need to keep innovating, develop products and services that cater to the specific needs of these markets. What works in the US might not work in Brazil or India, You have to be creative, come up with solutions that address those specific challenges.
It's like they're solving a new puzzle every time they enter a new market.
It is. And of course, you need the right people. Attracting and retaining talent, people who understand electronic trading in emerging markets, that's huge.
Yeah, global expertise with local knowledge.
You got it. And building a local presence in each market is key. Hiring local staff, building relationships with regulators and policymakers, demonstrating a real commitment to that market for the long term.
It sounds like a long game.
It is. It takes time. You got to build trust, lay the groundwork. But if they do it right, they could become just as dominant in emerging markets as they are in developed markets.
Which would be huge for investors. So we've covered a lot today. We've looked at Tradeweb's record revenue, their market share gains, the challenges from competitors, the rise of private markets, and of course the potential of emerging markets. It's a fascinating company. Lots of moving parts.
It is a real crossroads. Big opportunities, but also some potential risks to consider.
Exactly. So for everyone listening, we encourage you to do your own research, take a close look at the details, and come to your own conclusions. The financial world is constantly changing, so staying informed is more important than ever.
Couldn't agree more.
That's what we're here for, right? To help you navigate these complex markets, maybe identify some promising opportunities along the way.
That's the goal.
So thanks for joining us on Talk Tickers today. We'll be back next week with another deep dive into the world of earnings calls. Until then, happy investing, everyone.